Lido, basically. So what happened during the course of the day, although we were pretty safe in our strategies, I want to share sort of what happened during the day, and we decided to switch strategies, and I want to share why we did that. So I'm just going to share my screen.
Faisal, just one comment. You will probably have to turn off your camera, or we can't get more viewers on the call.
Okay, no problem. There we go. Okay. So do you see my screen?
Yes.
Okay. So what was happening? So yeah, we're not in UST. Why are we concerned? Well, when something that big happens in crypto, there's lots of shocks all over the place, you know? There's shocks like some protocols offering loans against UST collateral are getting hacked and so forth. Ours was not so big, but what was happening with us, like I mentioned, we were in a three curve strategy. So we were in a curve strategy. So what that means is we had taken the USDC and deposited into a three curve pool, which was then in a mem pool and so forth. So what happened is we saw that a lot of people, these are three lines, they represent the amount of coins in the curve pool, right? Over, you can see from the end of May 6th to about May 14th. What was happening is usually this quantity is quite stable. In other words, the number of DAI, USDC, USDT is quite stable in curve pools. And that's what it means, like as long as that's stable, we don't have impermanent loss. What we started happening is all of a sudden, people started dumping USDT, right? So that's what's happening. You see USDT climbing up, and then you see USDC and DAI going down. Why? Because whenever there's a crisis, there's a kind of flight to security or flight to quality, they call it. Like everybody wants the most secure asset. There's a lot of FOMO. So even though we didn't believe, USDT is at risk because nothing changed overnight with USDT, there was a lot of speculation in the market that was pushing the peg of USDT. So we were around here. As we saw this diverging, we made a decision that, look, right now, if we exit, now the problem is when you exit and it's diverged, you're basically locking in impermanent loss. That's the reason they call it impermanent. Like if we waited out here until these lines come back, there would be no more impermanent loss. We would have, that's why it's impermanent. But we're out here and we're wondering, will this peg collapse? Will the USDT peg collapse? Well, guess what? We don't want to find out. Because in that case, users will lose like 90%, 80% of their assets if the USDT peg collapses. Now, we'd rather make a small loss. I think it was less than 1%, as I understand. Maybe not even, because we were also making a lot of trading fees. What we decided to do is get out of this strategy and put our funds into Aave, because even though it was one of the most profitable weeks to be a liquidity provider, the risk was high. Right? Because the risk return is, we'll make a few percentage points today, but if USDT possibly collapses, you pretty much lose everything. So we went on and these are really exceptional situations. Like this week was exceptional in the last 2 years. So I think it's very, I think it was a smart decision to just get out. Hindsight is better, right? Now we look back, we see these numbers recovering. We can't question ourselves. At the time, it was an open question. Will the USDT be will so much people dump USDT that that USDT is not able to pay out the reserves? And if it can't, at some point FUD can just make it collapse, right? So we made that decision. So as you see, we've switched to a strategy that's not making as much as the other strategies, but we thought we were just going to wait out this really crisis time. So what was happening in three curve was the same thing happening in our Polygon USDC pool as well. As you can see, USDT was going up and the other ones, DAI, USDC were down. Again, a divergence, right? We're still here. I mean, this is right now. So I still think it's the correct decision. I mean, this is debatable. If any DeFi degens out there wanna debate it, we can. But I just don't feel comfortable when things have shifted so much to stay in the strategy, just to make a few, extra basis points per day at the risk of something really bad happening. Let's just put our funds in Aave and relax, and let's wait for this, volatility to be over. Those are the decisions we took. Now, there is one basically thing we need to, the same thing was happening, by the way, in our, this is not the same thing, this is a different thing, but again, it was the volatility. So now that people are all of a sudden worried about USDT, another thing they start worrying about is staked ETH, because as you know, the biggest thing the biggest trade right now for ETH has been staked ETH, right? So for ETH 2.0, if you want to stake, you can go to Lido. You can deposit your ETH, it gets staked for ETH 2.0, and you can earn a pretty good return with staked ETH. So we have a Lido adapter. But as you can see, what was happening is, again, this is the ETH balance. ETH balance in the pool was going down. Staked ETH was it was going down as well, but not as much as this. The gap was getting bigger. What does it mean? People are dumping staked ETH and withdrawing their ETH. So now we're in a situation where ETH balance is really low in the curve pool. And again, we have to make a decision. Like, yeah, we can make a lot of money right now, but do we really want to wait? We don't think anything go wrong. Nothing that has happened this week could affect the staked ETH, like ETH 2.0. So it doesn't make any sense for this to be happening. Market is basically getting nervous. But the problem is, if our users start withdrawing and this gap is getting bigger, they'll suffer bigger and bigger and bigger losses, right? So we again decided, just because of volatility, let's get out of the curve pools and let's go into Aave for now and just wait out this volatile period. So we tried to do the best we could to protect. In these kind of times, you basically, instead of trying to make a little bit of extra money, you try to protect your assets. That's what we tried to do for our users. There's one clarification, which is a major, I guess, bad on our side. It's a mistake we've made, which we found, is that we were reporting the price per share of our ETH vault incorrectly. It had to do with our Lido adapter. So this is our price per share for our adapter of our ETH vault. What we did when we switched to the Lido strategy, which was kind of like end of March, beginning April, you saw a huge jump, and we should have caught it then. Our adapter was not reporting the profit or the price per share of the vault correctly. In reality, that's because Lido is a one-way. It kind of lets you go from ETH to staked ETH, but doesn't let you go the way back. So it's an exception to all our other adapters. So this price per share jump did not really exist, right? This is a huge jump. What really existed was this curve, right? This is the profit we were making, the slope up, but this big jump did not exist. So when we actually exited the strategy from Lido, from staked ETH, this drop is also not a drop. It's actually, we're just slightly higher than here, because you just don't make that much funds in a month in an ETH, right? So that's, if some people notice a big drop sort of in their ETH balance, that is 100% on us. It was our mistake. It was not a risk to your capital, but it was a risk. It was a reporting thing with our adapters not reporting the price per share correctly. So we have now, we're working on fixing that. So we're not going to return to the Lido strategy until the Lido adapter is fixed. So that is the explanation for why there may have been some, you guys may have noticed some loss of your ETH value. The one thing I want to stress is this is the reason we have a beta. This is the exact reason. We are trying to fix things before we have to do them at a huge scale. We still feel that the Opti we're allocating more than makes up for this, because we're hoping you guys will make 50% plus APY with the Opti component, right? So this 4, 5, 1, 2% will not be a big deal. We want to optimize ourselves when low balances, when there's not as much at stake, and we can cover it with Opti. We don't want to be like Terra and have a huge protocol and then be learning about things. We like the approach Maker has done with DAI. They've built it slowly over time, but this week you saw it withstood the toughest of times. So we want to be that type of a protocol. And there'll be learnings like this, and we'll be as transparent as we can. We're going to send an announcement about this. We're also going to send a tweet explaining why we made the decision to switch strategies, and also this misreporting issue on our Lido adapter.